Levine, senior economist at Moody's Analytics, joins us this morning from Sydney. Good to have you in the program. Glenn, good Monday to you. So why are things looking ugly in the next few months, and how ugly?
Well, look, I mean, things aren't looking too great at the moment. What we're seeing at the moment, we're seeing exports and manufacturing around the region really starting to slow. We've seen some pretty awful numbers out of particularly the tech exporters, places like Malaysia and Taiwan. What we're seeing is the US tech industry, they're really not buying as much at the moment as they were, say, 6 months ago. This is partly inventory related, but it also reflects really some softness in underlying demand that we're probably going to see run through for at least the next couple of months. I mean, look, it's not going to be a disaster, but it's not going to be too pretty either.
Okay, it's not going to be a disaster, but it's not going to be too pretty either, meaning that we're not going to see negative growth somewhere, really hideous numbers that will shock the market, right?
No, nothing like that. I mean, this is not a rerun of 2009 or anything like this. And like I say, what we see really is that it's quite related to the inventory cycle. Firms in the US, for example, they're really pulling back on investment and purchases, which is not surprising given all the turmoil that we see in Congress, in Europe and so on. So they're really running a tighter inventory schedule. That's hurting producers around the Asia-Pacific region. But look, this is not a permanent shift or a double dip or anything like this, just a slowdown.
Yeah, and Glenn, what are your thoughts of what's going to happen in Europe at the end of this week? Because there are a lot of expectations on what the European leaders might agree to at the summit on December 8th, December 9th, and then also you're expecting the ECB to cut interest rates. How do you think it's all going to work out this week?
Look, I mean, it's hard to say. I think if there's one thing that we can really be pretty certain on is that they're going to disappoint. I mean, this happens time and time again. You get a bunch of these European leaders getting together, promising the world, and then really under-delivering. Markets are going to be volatile. Leaders are going to be disappointed, and Greece is going to continue to teeter on the edge, possibly dragging the rest of the peripheral countries down with them. So look, I wouldn't hold out too much hope for some sort of grand deal or anything like this.
Okay, well, that sounds pretty pessimistic, Glenn. How much is that priced into the market? I don't think much of it, considering the optimism we saw last week with U.S. shares coming off their best trading week since March 2009.
Look, I mean, markets, in my opinion, are just taking any little bit of good news and really just taking it as a buy signal. But, I mean, in terms of the underlying issues, nothing has been solved. I mean, we've got a couple of new governments in Italy and Greece. Sure, that might help, and that stabilised things for a couple of months. But look, in terms of the underlying debt issues, you've got Germany still playing hardball. You know, a lot of these banks in France and Germany really highly dependent on what these leaders, what they come up with. They're very vulnerable, and so I think, look, I think the only prediction that I would make for financial markets is that it's going to stay volatile. I don't know whether they're going to go up or down this week, but yeah, I think it's going to be choppy, that's for sure.
Okay, looks like it. Glenn, thanks so much for your time this Monday morning. Glenn Levine, Moody's Analytics, joining us from Sydney.